Welcome to our roundtable discussion. It's a second session of the morning. We are going to discuss about the collaboration among banks with government supports in growing Europe. We see many examples today that governments and banks work together with a common purpose to overcome challenges and barriers to growth. European integration and the quickening pace of the technological change has been catalyst for collaboration in many areas, from shared infrastructure and data to open banking and payments to digitalization of public services. Poland stands out in Europe in terms of a number of collaborative projects that help improve public services, grow credit in the small and medium enterprises sector, and to reduce the size of the grey economy. Households and businesses are benefiting from better services, access to technology, and much more affordable credit. Bank Pekao, that I run now, plays a special role in this trend. We are a leading provider of housing needs finance, in Polish House for Youth, mieszkanie dla młodych, where we are by far the leader. Small and medium loans with COSME guarantees and de minimis guarantees are a huge success in our bank. We care about sustainable growth and living conditions of Poles and have interest in more than 5 billion euro in public sector projects in recent years. We have been the leader in financing the public sector projects in the country. To discuss the potential of growing collaboration among banks and with government in Europe, benefits to economic growth and the challenges to be addressed, we have a distinguished panel here today, which will be moderated by Anna Celner, Global Banking and Capital Markets Leader of Deloitte. Welcome, Anna. And joining Anna and I on this panel will be Mr. Tadeusz Kościński, Minister of Finance of the Republic of Poland. Welcome, Mr. Minister. Professor Nouriel Roubini, professor at the New York Stern School of Business, famous economist and a long-lasting friend of Bank Pekao. Charlotte Hogg, CEO of Visa Europe. Gilberto Caldart, President of the International Markets for Mastercard. Thanks for coming. Laszlo Bencsik, Chief Strategy and Financial Officer of OTP Bank. Thanks a lot for joining. To set the stage for what I hope will be a very lively debate, we will begin with a presentation outlining some key trends and themes. This will be presented by Grzegorz Cimochowski, Banking and Insurance Leader of Deloitte Central Europe. Over to you, Grzegorz. Thanks a lot.
Thank you very much, Marek. Let me begin by handling technology first. Yes, here we go. So every good slide has a story, and this story has a following. This slide has a following story. It's about what, it's about how, and it's about why, and it's about how. What is basically the scope of our today's discussion? So collaboration among banks, but also with governments. The why is basically the graph and in the bottom left corner, which shows that those collaborative projects have been growing lately quite fast. And the how is how those collaborations help economic growth. And here we have 7 examples. I will very briefly walk through them. So one is about leveraging public investments. Thanks to collaborative projects, state doesn't have to put all the money. All it has to do is provide some guarantees, some subsidies that could be leveraged by the commercial banking sector. Same with public services, helps to thanks to digital technology that banks possess. Public services can be much more affordable and better accessible by the public. Then collaborative projects help also to defend local markets, especially in payments, where most of the innovation and disruption happened lately. Collaboration helps banks also to achieve scale. Some projects, for example, national cloud wouldn't be possible without collaboration, and there are some others. And obviously banks are for-profit organizations, so they need to grow revenues and lower costs. What I would like to draw more attention to is the risk aspect, as collaboration projects help to mitigate a lot of risks that arise. Now, the other question that you could pose, you can ask, is actually what problems, what challenges do collaborative projects solve? And I'm not going to go through all of those that are featured here, but I'm going to pick just 3, which I think are quite interesting and illustrative. So first one is that there are segments in the market, such as small, medium enterprises, micros, young couples, young individual customers, which are on one hand underserved, but also have limited access to credit. And collaborative projects, which we're going to talk about, actually help them get this access and start their life at full speed. Second is credit assessment. Clearly, no bank can arrive at the decisions without knowledge about the credit performance of its customers within the whole sector. But it actually goes beyond into more alternative data, so transactional data from utilities, from telcos. So here there is a bigger space for collaboration, and credit bureaus are definitely not the end of the spectrum. And then last but not least, I would like to draw attention to the shared ATMs and infrastructure. There are some assets which banks currently possess, which are, I would say, becoming more of a liability because they no longer create competitive advantage. And here there is a space for banks to share this infrastructure, which does not create much competitive advantage, but can help to reduce the cost base. Now, all those collaboration projects could fall into 3 categories depending on who drives them. So on the one hand could be government, and this is the left-hand side. So the collaboration can be imposed by national or international laws, and that obviously helps adoption, but it's very slow. On the right-hand spectrum, you have actually commercial partnerships, so those who you don't have to actually incentivize because banks do it in their own interest, and they have basically clear benefits of coming out of those. But I would like to draw your attention on the middle, which is the incentivized collaboration, because that's actually, I would say, the most interesting part. That's where basically a little bit of incentive, typically from the government, can basically incentivize the banks to do something which is in their interest, and that's probably the best area which combines the best of both worlds. So on one hand, there is a bit of intervention, like in the regulatory required collaboration projects, but there's also a clear commercial agenda for the participants. So that's probably the way to go if you want to accelerate collaboration among banks, and not only. This is a very dense slide, and obviously I'm not going to go through all of that, but it has a few messages. On one hand, we have identified 8 types of collaboration, and we're going to talk about it a bit later, drawing some examples. But more importantly, I would like to make few comments on specific types of those collaborations. So bank associations are typically the ones which are most common. And clearly you would see this in many countries. Payments are also the second in terms of popularity. Payments is an area of biggest innovation and biggest disruption as well, so banks needed to react and needed to defend by coming up with collaboration projects. But then if you look at those country flags in those categories, if you had a bit more time than now, and I actually had, and looked into it, there's like a few clusters of countries which specialize in certain collaboration types. So for example, Baltic states, they're very good in administrative services digitization. So e-government is actually an area where if you want to look for innovation, you would go to Estonia or to Latvia. That's where many of those projects happen. Then if you look into, for example, identity authentication, it's Benelux countries which are actually specializing in that. And then if you look into financial support distribution, that's where South and East Europe actually excels. So you have Italy, you have Poland, you have Hungary, you have Portugal, This is where many of those projects succeeded and thrived. Now, all those projects need to address number of stakeholders, especially now in Davos, when we talk about stakeholders capitalism, we need to balance the needs of different stakeholders. So it's not only about the banks, it's not only about the government, it's also about the households and businesses. And it's most of the needs relate to access to credit and, let's say, accessible and easy to embrace technology. Now, let me jump into three illustrative examples of collaboration projects coming from different markets, from different categories. So let's start with payments, where the need for collaborative projects came from the rise of e-commerce and cashless economy. And there you have two examples. One is actually live and running in Poland. It's called Blik. That's a mobile payment scheme that allows not only to pay online, but also in physical stores. You can withdraw your money from ATMs. You can do instant P2P payments. And that's a huge success in Poland, which was possible lately after Bank Pekao joined the group of banks and created a critical mass and made it basically a universal payment solution in Poland. On the other extreme, and that's a commercial partnership, so that's no government, no incentive was actually needed to make it happen. On the other hand, you have a Hungarian example, a very interesting one, which will come live shortly in a matter of months, with a big participation of National Bank of Hungary, but also the Hungarian Banking Association, to introduce instant payments covering 90% of transactions, both for private individuals and for businesses. So that's very, very interesting, and I'm sure Laszlo will talk about it later during the panel. So that's the payment example. Another one is I'm going to go pretty quickly. It's about PSD2 and open banking. And obviously, you know, in theory, each bank could come up with its own API to comply with the PSD2 initiative, PSD2 directive, but banks have pretty quickly figured out that it makes much more sense to unite, to collaborate and create one API standard. And there are two examples from Germany and from Poland. Obviously, there's a number of other countries which followed that path. So that's a clear example of commercial partnership which serves the purpose not only of banks, but also of the customers. And then the last example, I think a very interesting one, financial support. And there we have, again, two examples from Poland and from Hungary. Examples of financial support which is subsidized by the state to help young couples, young borrowers to get a mortgage. In the Polish example, and that's actually one of the programs where Bank Pekao has a very high participation of, I think, close to 50%. And then there is another very interesting example from Hungary, a subsidy for couples having babies. If you have one baby, you get your interest waived. If you have two babies, you get your principal waived in 30%. If you had three babies, your principal is gone. And we're just joking with Laszlo prior to the panel that I actually missed my chance because I have three, the fourth is coming, and I'm not Hungarian. So unfortunately, I was born maybe from that purpose, not in the right place. But as I understand, if I had three more, then I could benefit from that, and I would be a Hungarian citizen. So I think the jury is still out. Okay, last few slides. We are in Davos, so we need to bear in mind that whatever topic we're talking about, it needs to balance the different stakeholders, and it has to support inclusive economic growth. So how do collaboration pass that test? And let me pick on three examples here. One is the administration services digitization, and their collaboration actually helps to not only to reduce costs, but more importantly, to increase the adoption of technology. Because I mean, digital technology is the one that is much easier to penetrate bigger groups of citizens than with a traditional means. Then the second one I want to draw your attention to is financial support, which again helps to cater for needs, especially loan needs of, let's say, some segments which are not necessarily in focus, such as small medium enterprises, micros, young couples, young citizens. And then the last one is about is about payments, cashless payments solutions, which we're going to talk about in the panel, that not only increase speed of efficiency, but also reduce the gray economy, which helps all the stakeholders. And then the last two slides before I hand it over to Anna. One is about the frequency of those collaboration types. And there is a very interesting picture here, because what you have on the left-hand side, you have the two most frequent seen collaboration modes. So it's bank associations. No, it's not a big surprise. That's definitely in the interest of banks to set standards and to shape the regulation, sensible regulation. Payment solutions don't come as a surprise neither, because that's an area where biggest innovation is happening, biggest disruption. So banks need to react. And also along with the cashless trend happening, not a surprise. Then you have business subsidies and business support programs we talked about. That's a very nice, and as we will see, very common collaboration, which is a win-win, because on one hand, the government, with a little bit of money, increases the motivation of banks to do something which is for the good of, let's say, some segments which otherwise would not have access to credit. And then let me spend the last minute on this slide on what is on the right-hand side, because I think that's even more striking. So the least popular collaboration we find in Europe, in the small sample we have looked at, like 15 countries, is actually e-government. So e-government, I mean, indeed, in Baltic states, you would see some banks collaborating, but other than Baltic states and few other examples, government is not fully utilizing the digital advanced technology that banks have. Maybe in Poland it does, but in many countries it doesn't. So that's for me a clear takeaway that government could actually utilize the advanced digital technology that banks have to spur or to grow e-government initiatives. Another category which is actually at the top, at the right, so which is very infrequent, is crime prevention. So there again, we found only very few examples in UK, Netherlands, and I think in Latvia, where there was a broader collaboration of government and commercial banks to prevent crime. And obviously, the criminals, they don't follow the borders. They have a lot of means to conduct crime. So there's clearly a call action for the government and for the financial sector to prevent crime in a more let's say collaborative and organized manner. And last slide before I pass it on is the trend. So you have seen this on the very first slide, that the trend is an upward trend. But let me comment on basically different phases, what happened in the last 3 decades, because we look into the last three decades of collaborative projects in Europe. So initially, there was pretty slow growth in the 90s. And for those of you who remember, it was the time when basically the CE economies were transforming. So the banking systems were forming. So there wasn't really too much banks to collaborate with, because they were actually being set up. So that also doesn't come as a surprise. Then what you see is actually in the outies post the year 2000. It has actually accelerated ahead of the financial crisis, and that is very much linked with the expansion of the European Union. The peak of the European Union integration enlargement was in 2004 when 10 countries joined, and there you see a growth which was surprisingly driven mostly by the payment and shared infrastructure projects. And then the financial crisis comes, and the growth stalls. But then it actually, following 2011-12, it accelerates again and it boosts. And then obviously the question arises, where does it come from? So on one hand, what you don't see actually on this slide is actually a much broader adoption of mobile banking. Mobile banking actually started to grow around 2012, 2011. That's exactly when many of those projects also started to happen. And another one is regulation. So PSD2 enacted in 2015. It has also contributed to acceleration of this trend going forward. And now it's actually grows. It looks a bit like exponential curve, but probably it's not. Yet it seems like the trend is there. And I think the panel, in the panel, we're going to discuss about 3 major topics. One is what are the key learnings from those collaborative projects that our panelists experience themselves. Second is what role the government could play in accelerating this trend to the benefit of all stakeholders. And last but not least, how can we ensure, how to best ensure competitiveness of European banking industry? Is collaboration the only answer? Is consolidation another way, or maybe both combined? And on that note, let me finish and pass it on to Anna and to our distinguished panelists.
Thank you very much, Grzegorz.
Thank you.
Thank you and warm welcome to all of you on the panel and to the audience. Over the past 20 years, Poland has been a growth leader in Europe, and its financial sector a large enabler, key driver of that growth. However, the key aspect of that success, of that growth, was very strong collaboration between the banks, collaboration with the government, and collaboration across financial sector with non-financial players as well, technology companies, telcos, and recently fintech. In today's panel, we'll explore the theme of collaboration and specifically how that collaboration may be even more important going forward than it was in the past. We'll look at this in the context of 3 examples: credit subsidies and guarantees, payments, and very importantly, technology, innovation, and fintech. So let me start with credit subsidies and guarantees. I would like to direct the first question to Marek. What has been experience of Bank Pekao with credit subsidies and with guarantees, and therefore collaboration with the government?
Okay, thanks, Anna, for the question. Actually, Pekao, for years, has been a leader in with regard to credit guarantees and subsidies programs, both with regard to the personal finances as well as small and medium enterprises financing. For a very long period of time, we were by far the largest contributor to the mortgage subsidies program offered by the Polish government, so-called housing for youth, mieszkanie dla młodych. And at some point we have almost 50% market share in that program. In that context, if you look back on the last couple of years when we were participating in this program, we have helped to provide affordable housing. We were helping out buying the first flat to over dozen thousand families that, thanks to this program, allowed to buy the first flat. With respect to small and medium enterprises, we are also actually the leader as it comes to subsidies program. Together with the BGK, State Development Bank, for years we are offering COSME guarantees and de minimis guarantee programs, which are offered by BGK, which are a huge success among small and medium enterprises. And thanks to that, some of the SMEs were allowed to finance working capital and investment loans that they wouldn't have get otherwise because of the credit consideration. So as it comes to de minimis and COSME guarantees, this is actually a program which, with the help of state subsidies, allows small and medium enterprises to get the first loan and grow the business.
Okay, thank you, Marek.
Maybe just one other thing, just in the context of the main themes of World Economic Forum, there is a lot of discussion about sustainable growth and environment. So I'm happy to say that also Pekao is a leader in introducing programs which are helping out financing sustainable energy for the small and medium enterprises. We are offering with some state subsidies program which allow to buy solar panels for small and medium enterprises, and that program is also a great success among our clients.
Thank you, and thank you for sharing that last point as well. OTP Bank has been active across 11 Central European markets, Hungary as well. Many have subsidy and guarantee programs as well. What has been your experience in this area?
Actually, 12 countries. We very recently acquired one in Slovenia in December. I'm very happy to be in this panel and to be here and share with you some of the experience we had, because when I asked my colleagues to summarize the initiatives of the Hungarian government and central bank over the last 10 years, they came up with 5 pages written with small letters. And that shows how active the sector was in Hungary, how active the government and the central bank has been during the last 10 years in Hungary. And if we talk about subsidy programs, it really started with fostering, boosting growth back in 2014 when a funding for growth program was initiated by the central bank. And actually it lasted up until 2018. You probably know that the recession in Hungary was relatively deep compared to the countries in the region, and it lasted longer, and we actually ended up having a creditless growth period. We had 3 years where GDP started to grow, but we still had negative volume growth, nominally. And to break out from that deadlock situation, the central bank came up with very extensive program to try to reinvigorate loan growth. And it actually ended up being more than 10 billion euro funding program by the central bank, which was channeled through the banking sector at very low rates primarily to SMEs and micro enterprises in Hungary. And that's like 6-7% of the GDP, so that's substantial. And that has changed the picture. And last 3 years, Hungary was growing well about 4%, right? So this has actually succeeded. But this is just one front. The other front, the government has also come up with various measures, and they are typically targeted at boosting demographics. One of the biggest problems in Hungary, and I think it's very true unfortunately for most of the CE countries, the demographics are negative. And therefore, inducing more childbirths and somehow giving financial incentives to have more kids have always been in the mind of the government. And they have really, I mean, just what you mentioned, this program, this loan it can be up to 30,000 euro. It's a one-off unsecured loan. And there's only principal repayment, and if there's one additional kid in the family, then there's no interest payment, and if there are 3 additional kids, then actually the whole remaining loan is forgiven, and it's all subsidized and it's all guaranteed by the state, and it's also distributed by the banking sector. So this is obviously great for the banks, and it's great for the customers, and it's a very efficient way of distributing these subsidies.
It's a strong example of collaboration with the government.
I believe so, yes.
So I would like to actually ask about the government perspective on the same topic. And Minister Kościński, what are maybe some of the key objectives of the government that could be enabled by this type of system of subsidies and guarantees?
Yes, good morning to everybody. Well, first of all, the role of central government is to provide or to help promote the provision of good quality, publicly accessible infrastructure. So we can't, as a government, finance everything out of our own pocket because that's prohibitive. The cost is too much for the taxpayers. So we need to leverage the financial markets. So collaboration is obviously the best way to work with the financial markets. In Poland, we've had some excellent results on sort of on the macro scale, sort of motorways, railways, modern railway stock, etc. We've provided guarantees. It's about 25 billion euros already, which has been under loans given by the financial sector. On de minimis, we also have a tremendously good record. I think we have about 60 billion euros in de minimis loans granted. It's about 160,000 credits given, so a very good sector. And on the back of that, of course, banks are able to also give commercial loans, and so we expect another. Was calculated about 7 to 8 billion euros has been granted in commercial loans on the back of government-backed de minimis loans. So all in all, that's probably created about 200,000 jobs, which wouldn't have been there otherwise. So I think this is the type of good example how collaboration between central government and the financial markets in loans works.
Okay, great, thank you. Credit subsidies guarantees is just one of many ways that government and financial sector can collaborate. And Professor Roubini, I would like to ask for your views, not just on this example, but generally on the collaboration and the role of government collaborating with financial sector.
Well, it's quite well known and clear that a key element of economic growth is provision of financial services. There's a strong correlation between depth of the financial system and the quality and efficiency and economic growth, intermediation of savings to investment, payments, insurance, capital market activity, asset management, credit allocation, you name it. And we also know that there are some market failures that imply that maybe there's under provision of financial services, maybe to the poor, to SMEs, to women, financing of infrastructures, home ownership and so on. So that's where a role in any kind of mixed economy of having government intervention in the financial system and collaborating with the financial system to maximize the provision of these public goods directly and indirectly is key and important. And I think the presentation showed all the wide range of things that can be achieved. And in some countries, actually, as we know, there are even state-owned banks. And the experience with state-owned banks, like with state-owned enterprises, that, you know, if it's arm's length, if they're given essentially objective maximizing both shareholder and stakeholder value, then they can work efficiently as much as private banks. Of course, oftentimes government have also social and economic objectives that are valuable, and they can use the financial system as a way, an instrument of providing it. That's where the source of the subsidies, of the guarantees, and whatever happens. And that can be positive up to a certain extent. We know also there are experiences around the world in which maybe having excessive interference of government in the financial sector leads to maybe banks overextending themselves, whether private or public, and then you create MPLs, and then you get costs for the system. There have been plenty of examples recently, for example, in India, where, of course, state-owned banks were given a whole bunch of a range of social services, like, you know, stimulating agriculture as opposed to particular sectors, and end up overextending themselves. Now they are in trouble, and then you have to fix them and clear the non-performing loan, recapitalize them, and so on. So you have to find the right balance between the fact that there are going to be, of course, public sector and public policy objectives, and making sure that you don't interfere with the financial system in a way you're going to be damaging it, whether it's private banks or public banks. And I think finding the right balance within the two is something delicate, but the fact that it should be collaboration between government and the financial sector is I think, key and understood, and certainly very valid.
Okay, thank you. I would like to now turn our attention to payments. Payments, and specifically in Poland, the Cashless Poland program. Minister Kościński, you have been a leading proponent of that program. What are some of the key objectives and perhaps some achievements already and challenges that program is facing in the country?
two reasons why I'm pushing the cashless program in Poland. First of all, we're trying to move the Polish economy away from what I call an imitation-based economy, where we were competing in the world on price. So we weren't really innovating. We were just doing things the same as somewhere else in the world was, but at a cheaper price. We're moving that to innovation, so away from analog to digital. And the second is, of course, the cost. Everybody thinks that cash is free because you don't pay interchange on cash. You don't pay, at least consumers don't pay for withdrawing cash from banks or paying for products and services in cash. So everybody has this thought that cash is for free, when in fact it costs over 1% of the GDP. So it's a tremendous cost. That's 1% per annum. So it's a tremendous cost for the economy. In Poland, we have over 220 billion Polish zloty in banknotes and coins, which is not working for the economy at all. It's in people's safes, under their beds, etc. If that money was put into bank accounts and banks could actually use that then to finance the economy, it could have a big effect on the economy. Also, cash is, as we all know, it's fuel for the grey economy. We have a tremendous fight with the grey economy in Poland. We've had tremendous success in the last 3 years of reducing the tax fraud, especially on VAT. This is because it's becoming more and more digital, moving away from cash to electronic. So I think those are the main reasons. Benefit for everybody going forward, because going into digital payments, yes, on the one hand, you do leave a trail behind you where you've used things like that. But going forward, the economy, business is going to be based on data. It's all the data that we're leaving that's going to be used by business to give us the services and products we require. So I think there are the positive side of that as well.
And any challenges that you see with the program?
Challenges, there's always lots of challenges because, of course, we have people who are digitally illiterate, so especially the older generation. So we have to be very, very sensitive that we don't force them to have to use electronic payments. And in Poland, we have the strategy that we're trying to make shops have the mandate to accept electronic payments, so telephone payments, card payments, but we don't force the consumers to actually use electronic payments. They can use any payments they like. And of course, not only shops, but mainly shops which are working in the grey economy and not paying their fair share of taxes. Of course, they're very vociferous in making sure that everybody knows how bad electronic payments are and how good cash is. So we have to counter that somehow.
So Marek, Bank Pekao is plays a huge role in the Cashless Poland program. What has been the benefits for your customers so far, and what do you see in the market on the ground as the response from your customers?
Actually, since the very beginning, Pekao has been an active proponent of Cashless Poland. We are one of the key distribution channels of the terminals to our clients. Since the very beginning, we are actively promoting this service, and we are very supporting the government initiative to reduce the cash circulation in the economy. Our clients on the small and medium enterprises side actually very much like our distribution process. It is clearly shown in the numbers. The numbers of cashless terminals that were distributed to our small and medium enterprises increased 68% year on year. And the value that we offer to customers that would like to join the Cashless Poland program is, for example, a very convenient distribution and terminals collection process. Clients can collect the terminal from one of our over 300 branches that are designed for this. And after the collection, the terminal can be activated within just a few minutes from the SMS code, and it's active since then.
If I could add, I think it's quite interesting to go back how the cashless program started in Poland. It's collaboration, coerced collaboration, I would say. From my point of view, I needed shops to accept electronic payments, and the shops were telling me, it's too expensive to accept electronic payments. So I talk to the banks and I talk to Visa and Mastercard and saying, I've got the problem that it's too expensive. So either I reduce through putting an act through Parliament, I reduce the interchange down to zero off the cost, or we come up with some other concept. And this is where the market came up with a concept where instead of most of the money going into the banks from the interchange and to Visa and Mastercard, we would create a fund. We created a 600 million zloty fund, unique in the world, which was then used to provide 600,000 POS terminals free of charge for 1 year to our shopkeepers, and also the cost of transactions was zeroed. And that's, I think, a very good example of how we collaborated in Poland. I think unique globally, that banks, payment service providers, international card schemes, and the government work together. And it's worked as a success. Over the last 2 years, we've had 250,000 new terminals under the scheme provided.
It is indeed a fantastic example of collaboration, but also collaboration that benefits public, benefits innovation in the market and businesses that are involved. So definitely great example. Thank you for sharing this. Laszlo, from your perspective, do you have similar experiences of programs in Hungary or elsewhere where the bank operates?
Yes, but before I go into that, there's a very interesting phenomenon. Despite all the efforts of governments, central banks, technology firms, fintech, banks, card companies, cash circulation actually increases. Not just nominally, but also as a percentage of GDP. In the Eurozone, if you compare it back to 2006, the year when iPhone was first launched, as percentage of GDP within the Eurozone, it was less than 5%. Today, it's actually more than 7%. In Poland, it was 7% in 2006. Today, it's more than 10% of GDP cash. In Hungary, it went up from 8 to 13, which is very contrarian, right? I mean, digital services, digital payments, digital cash is very easy to use, and despite this fact, customers, people, companies tend to use more and more cash. And this is actually related to the interest rate environment. So there's a very strong correlation between the interest rate and cash usage as percentage of GDP. So it seems that no matter how hard in this low rate environment, it's actually very difficult even to stop growing cash as percentage of GDP. Now, to tackle that problem, actually there's another very forward-looking initiative in Hungary done by the central bank. The central bank owns the clearing system, the transfer system. It's called Giro. The traditional one they operated, and they decided to develop an instant payment system, and it's going to be launched in March. The infrastructure is provided by the central bank. All banks are participating. It's going to be 24/7, so online, full-time, instant, few seconds. It's not going to cost more to customers. And it will, first step, it will cover only the local currency, HUF transactions. But then actually there's a plan that in a short period of time it's actually going to be linked to CPA, CPA, and also involve euros. So that will actually create an infrastructure which will be, in terms of its efficiency and service level, close to the level of the card infrastructure. So that's quite interesting, and we are very eager to see what the impact will be and how customers will shift due to this higher level of service of provide between accounts to accounts, deposits to deposits, transfers.
So as we heard, both Visa and Mastercard were initial founders of the program in Poland, but you also have been collaborating around the world within financial sector and outside. What type of lessons learned, or perhaps other types of collaborations that you have seen elsewhere that could be of value in Poland, innovative solutions, things to overcome challenges that Minister Kościński mentioned?
Thank you. So I think Cashless Poland is a really good example of the kind of characteristics where this works well. The first characteristic, I think, is a very clear understanding and clarity of objectives. You Minister, what you were looking to do, and I think we all understood that very well. When you don't have that understanding of purpose or a misunderstanding of what government wants versus what the private sector might want, I think these things begin to fall. I think the second characteristic of cashless Poland, which again is important for collaboration, is where you've got a very strong alignment between the purpose and interests of the private sector and the purpose and interests of the government. And I've worked on both sides, so I sort of like to think I can see both ways. You know, if I look at what financial services are trying to do, and you've said this, their very essence is around economic growth and supporting businesses and consumers. Actually, you know, our mission is the same. It's around enabling consumers, businesses, and economies to thrive. And so being able to draw a very clear line between what you're fundamentally trying to do as an institution and what the government is trying to do in fostering economic growth, I think are two characteristics one should look for in any collaboration. I think particularly the focus on small business in cashless Poland is particularly important because in many economies, small businesses are the engine of employment growth. And if they cannot be enabled to operate in a digital world and the great promise of going beyond their boundaries, then you know, there is a real risk that they fall behind or somehow you get a more binary economy. So if you look around the world, I'd always look for those two characteristics and equally look for the power of those, I think, very resonant in the small business sector.
Yeah, not to be repetitive, I think, you know, for us at Mastercard, collaboration and partnership is the essence of who we are. And clearly on the cashless Poland, I think we align all interests. And in the theme of Davos, this is clearly, you know, in addition to be a cashless initiative, is an inclusion initiative because you're getting the SMEs to be financially included and digitally included, accepting electronic payments in a way that builds the behavior. And also I think Poland has another great example of, you know, innovating, if you will, which is contactless. You know, if you go a couple of years ago, Poland had no use of contactless. Today more than 50% of the transactions are contactless, and that is coming a lot from small tickets and low value tickets. So I think it's all about aligning the interests, providing incentives for all sides of the equation. You have to provide incentives to the consumers to use. You have to provide incentives for the SMEs, and it's clear the case where the government really understood the need, understood, you know, the opportunity to reduce the grey economy and actually align all interests on it. So we're really, you know, happy to be part of it.
So you mentioned collaboration with the government, but also innovative aspects of what Poland is doing. In this context, I would like to actually share an example and ask you to comment. And Gilberto, back to you. The example of the BLIK mobile payment system developed in Poland by collaborated banks, and today widely accepted, adopted, and perhaps a standard in the market. I know you have strong interest in BLIK. What are your comments? And
yeah, I think this is another great example that innovation happens, you know, everywhere. So this is a clear innovation that, you know, started in Poland with BLIK. 90% of the Polish population actually have access to it. We're happy of, you know, having partnered with BLIK and invest on BLIK to enable, you know, the BLIK mobile payments to be accepted through the contactless acceptance network in Polish, but take it globally. So leverage our technology, our infrastructure, our acceptance, and then take, you know, every citizen of Polish that goes outside can use their and it's clear collaboration with the banking industry and everybody, applying the best of both, the innovation and the usage that the Polish like, and putting our network, our technology, our safety and security, which is kind of actually the digital enabled systems that, you know, I'm not going to get technical here, but tokenizing all the transactions that go for BLIK, you know, in Poland, outside of Poland. So I think it's great example. We are really happy of being partner of it and investing on. Okay,
great. Marek, you made, through Bank Pekao, you made BLIK available to your customers, bringing effectively BLIK to the universally adopted system in Poland. What have been the benefits for the bank and for your customers from using BLIK?
Okay, thanks a lot for the question. That's actually a very good example. for a number of reasons that I will not dwell into. Pekao was the last bank to join the BLIK system. After the bank has been bought from UniCredit by PZU, we have reconsidered the strategy, and our conclusion was that actually looking at the ecosystem of payments is super important to make sure that the ecosystem is closed. Given the fact that Pekao is the second largest retail bank in Poland, without Pekao, BLIK couldn't really make a critical mass and show its full potential. And neither the clients of our competitors nor the clients of Pekao could use its benefits in full. And then we have decided that it's actually very beneficial for our clients to have access to BLIK payments as well. And for those that are not familiar with this, BLIK is basically the system of mobile payments that allow users payments in a completely like a contactless, cardless effort, cash payouts, instant payments between the mobile phones, as well as the creation of the electronic checks, which are lasting just for a given short period of time, and also extra security is added to those checks as compared to what we know from their paper cousins. And actually, we were getting a lot of questions from our clients why we are not in. So we have decided to sign up as the last large bank, as I said, and since then the popularity of BLIK among the Polish customers actually grow up exponentially. Just before we have started the panel, I was looking up at the latest numbers of how many payments were done in BLIK in last year, and actually the number is mind-boggling, because it looks like according to the recent estimates, the number of payments that were done within Poland in BLIK is close to 200 million in 2019, which means that every man, woman, and child in Poland did over 5 BLIK payments in last year.
So great success. Congratulations to everybody involved in the project, of course. Laszlo, do you see similar projects in payments, either in Hungary, across the region? Any other examples to replicate what Poland has achieved in this space?
Well, I think, first of all, in payments, all banks and fintechs and big techs are pouring enormous amount of investment and money in order to modernize the infrastructure. So I think I see that in every market, basically. So banks are kind of running a race in terms of providing better and better features, more convenience, cheaper to customers, and it's very easy to actually replicate and copy these solutions. Well, there's one good example, for instance, in Bulgaria. It's called Borica. It's actually quite old. It's 30 years old, and it's a complete payment infrastructure. It's owned by the central bank and all the banks together. It's non-profit, and they provide full-fledged card and payment services to anyone white labeled. It's for a fee. So that's very convenient and very low cost in a sense, and actually makes the banks who don't use that, force them to be even more efficient, more competitive. So I think that's a very general term we see everywhere. And more initiatives come, because just linking to your point, I mean, it's very clear that there's a huge economic benefit if you have less cash circulation. There's so much cost at a society level attached to it.
Thank you. I would like to turn now to our last example, particularly specifically technology. Technology is a driver of innovation, of growth. Given availability of exists today with cloud, big data, analytics, and expectations of how those technologies are going to enable and drive growth, it's a critical topic for banks as well. In this context, collaboration involves not just banks and governments. Here we have big tech companies with their cloud platforms enabling innovation, but we also have fintech. And in many ways, fintechs in the past has been seen as a potential threat to the banking system. They do challenge, they do disrupt, but also they provide an opportunity to perhaps collaborate, to perhaps integrate solutions that they come up with within the system. So I would like to direct my next question to Visa and Mastercard. And the question is, collaboration with fintech, is it a threat or is it an opportunity? And how do you deal with this?
So I think we, all of us in this day and age, are completely overwhelmed sometimes by the number of different choices you have and all the different technologies that are available. And actually the only way to navigate through all of this is to try and stay very grounded on what it is that we as people kind of want to do and what matters. And so I like to think that at least when you're spending money or thinking about spending money, there are three things that are really important. One is you need to feel super secure. The second one is you've got to feel in control. A lot of people balance very complicated lives, and you've got to help them feel in control. And the last one is it's got to be somewhat simple. And there's lots of great examples of that. And in a sense, if one doesn't go very far from those kind of characteristics, then everything is shaped by your view on that. You know, I think that Europe is peculiarly exciting from a payments point of view right now. It has this wonderful mix of very different sets of people and citizens. It has this extraordinary digital development and innovation, and it has this amazing regulatory structure that doesn't exist anywhere else in the world. Lots of things are going to change. But the banks, I think, always in Europe have always been more open to looking at partnerships to deliver for their customers in a way that perhaps in North America that hasn't been the case, perhaps, in the same way. And in a sense, our institutions grew up as part of that, as open networks that look to do some things really well, but also between us all set standards. And the joy of setting standards is that it enables innovation to take place on top. And you know, I like to think even an open network, it is stronger the more participants join it, and it is stronger the more people innovate on those networks. And so this openness, this establishment of standards and this ruthless focus on what it is that people really want to do with their lives in the very important decisions they make is what's going to help us navigate through. And therefore, in that environment, you can embrace technology and partnerships, but you shouldn't get so excited by the technology you lose sight of that.
Yeah, I think just to add a couple of comments and also comment on Laszlo mentioned before. So we see ourselves as kind of a multi-rail company that operates cards, ACH infrastructure, push payments. So we are agnostic to where the transaction goes, and collaboration is actually a way to go. And we see, especially in Europe, in the age of open banking, the collaboration between the fintech, big tech, and the banks as a good thing that actually improves, at the end of the day, what we as an industry are delivering to the end consumer, either the SME, either the merchant, or the consumer of the bank. You've seen that, fintechs, a lot of times focus a lot on, consumer experience and providing an easy access and consumer experience, but actually they don't have, if you will, the scale and what the banks have, and then the partnership among themselves has been creating fantastic services for consumers out there. So I think it's a positive, and actually it's coming everywhere in the world. So we look around the world, there's 25, 30 countries working on open banking and providing opportunities and choice, and we see ourselves as one of the enablers of choice. Whereby at the end, the winner is the end user and the consumer in that space.
Thank you. Professor Roubini, you have strong views on technology and see technology as a potential driver of innovation and driver that will impact banking system. What are your views on collaboration with technology providers and the impact on future economic growth and public interest?
Well, I think there is a technological revolution in many sectors of the economy, and it's a combination of using AI, machine learning on one side, big data, and IoT. It's going to be applied to lots of things, including to financial services. So in financial services, that's called, fintech. Gradually, over time, it's going to affect payment system, credit allocation, insurance, asset management, even capital market activity. It's an ongoing process. I'll make a point that there was a previous discussion about cashless societies, and I was recently in Sweden and China where that process already occurred. I commend the Polish going in this direction. It's true that in some parts of Europe, cash is used more. I think a lot of it is large denomination used for activities that are semi-illegal. But the trend around the world is that eventually cash is going to disappear. I think that's clear. Secondly, forms of digital money, of course, have been around forever. You know, even bank deposits are effectively digital. And now, of course, in the fintech space, there is a whole bunch of new ideas about payment systems that are digital. You know, in China is Alipay and WeChat Pay. In India is UPI-based systems. In Kenya and Sub-Saharan Africa is M-Pesa. In US, you have Venmo, PayPal, Square, and you name it. And there are initiatives like the ones that are happening, you know, all over Europe as well, and so on. So I think that revolution, one, is ongoing. It's going to happen, and in payment is even faster than otherwise. I think that one of the challenges is going to be once cash has disappeared, the central bank are thinking about whether to create central bank digital currencies. I think they're going to go in that direction. They're not going to be actually based on blockchain or crypto. There's no reason why you should have a DLT technology. You can have a single centralized ledger, like right now. Banks have access to the balance sheet of the central bank. Eventually, corporates and households will have it. But then that's a big issue because, you know, if you have a central bank digital currency available to everybody, then maybe you are disintermediating both private banks and deposits. You're not needing them. That's a risk because the whole fractional reserve banking system collapses and you go to narrow banking. There's a problems of financial stability and intermediation. And of course, everything else, like also the digital payment system, might be also crowded out. So I think there are pros and cons of having a central bank digital currency is available to everybody in the economy, and whether central bank should be in that particular business. I think it's a tough thing that's going to be discussed quite vehemently. But I would say in the case of fintech, I think that traditional banks are going to have to adopt those fintech solutions and are doing them. It's not as if the banks are going to disappear because fintech firms are going to take over. You'll adopt them and there'll be integration. I think the bigger challenge is about big tech because big tech is already very, very powerful. And there's a backlash against big tech because of its oligopoly power, privacy, the ways you use data, and other things. If big tech firms have access also to financial intermediation, then they have access to those data, P&L, balance sheet, then their market power might be even more extreme. And that's where maybe the issue of a real competition become a problem. And that's why I think there'll be restrictions to how much big tech firms can directly. You know, this Libra project, you know, you have everybody on Facebook can have an account that's fake. If you want to transfer money, you need proper MAL and KYC. And if you're paying for those compliance costs, you should be registered, licensed like a bank. Otherwise, you cannot do those kind of things. And I think that the public sector rightly push back against those types of ideas. So getting big tech into this space is something that's to be carefully regulated and discussed. Otherwise, you might have unintended consequences that might be negative.
So in terms of collaboration, your advice would be proceed with caution when it comes to big tech?
With big tech, you know, there's a broader question of whether you want to regulate them or not. But certainly, if they want to enter in the provision of financial services, and you know, the new gold and the new oil is data, and who controls data has power. And having a situation in which somebody has too much control over data, including financial data, and use it for their own interest, is an anti-competitive kind of behavior. That's why I think especially the entrance of big tech into this space is something that has to be very carefully taught, and regulators and supervisors and central banks are pushing back against it carefully, because lots of issues that have to be considered: competition, systemic risk, AML, KYC, a whole bunch of other things. So I think that that's going to be very constrained over time.
So with this in mind, I would like to come back now to Poland and Minister Kościński. What are the ways that Polish government supports innovation, collaboration with technology companies, both from the perspective of leveraging infrastructure and digital capabilities like trusted identity, digital identity, but also from the perspective of making, delivering public services and also easing the way of doing business?
Well, first of all, I think it's worth mentioning that even at the startup phase, we have a problem in Poland because of modern regulation on financial institutions. It's very difficult for them to give loans to startups. They're okay to give to consumers, to companies, but when it comes to startup, it's much harder. So the role of central government here is to create seed funds which help the funding of startups, and that's something we've done, I think, quite successfully in Poland. Now, when it comes to actually working together with fintech companies, I think we also have a very good track record in Poland. Our flagship government program 3 years ago of 500 plus, which is 500 zloty for every child benefit for every second and subsequent child, now been changed to every child. Well, when that was announced, we gave ourselves a target of implementing it within 3 months. Now, all those millions of people, all those millions of families who started going physically to local offices to register for the benefit, that will just totally the whole system will grind to a halt. So the collaboration with banks was very good, where we used the banks' capabilities of authenticating their customers through their internet offering to actually log on to the system for registering for child benefit. I think it's an excellent example. Another example recently, which has come into force, is what we call split payments and invoice payments in Poland. Because we've cracked down on VAT fraud, we've implemented a scheme where when you pay for a VAT invoice, the net amount goes to the seller, and the VAT amount goes onto a special account in the bank, which is only available for use for dispersing tax either to central government or to other companies for tax liabilities. Also, together with the banks and the National Clearinghouse, we implemented an application called Steer, which basically analyzes every single payment and flags it if it looks like a risky payment that perhaps a startup on the first day is issued an invoice for 1 million zlotys, and how could a startup issue that sort of invoice where the central system then flags that. We can block the account for 72 hours to check if there isn't a fraud going on. So I think collaboration in a lot of these areas is I think, very important. And going forward, I think data is the future of business for me, because 20, 30 years ago, of course, companies and banks especially, they differentiated themselves by the functionality they offered in the internet. Well, now very few companies actually write their own applications. Everybody buys them, so whoever buys whichever applications, it's very quickly everybody has the same pricing as well, very similar pricing. So the differentiating factor going forward is going to be the customer experience. And for customer experience, you'd have to have data. You have to have appropriate data. So again, in Poland, we're currently working together. There's a very good pilot scheme going on. We have fiscal registers. When you go to buy something in a shop, you have a fiscal register and a fiscal receipt. At the moment is paper. We're in pilot mode where when you make the payment, that fiscal receipt actually goes onto your bank account, and so you have all your receipts there. Now that's going to be a tremendous source of data going forward. Also, we plan to implement next year or so e-invoicing, so that every invoice will also have its digital footprint, and so the data available for everybody, appropriately packaged, of course. You'll be able to see. From my point of view, I'll have inflation online. I know exactly which product is the price is going up or down. Producers will be able to see how their loyalty schemes are working. Banks can see with their customers. At the moment, they see how much their customer earns, how much their customer spent in a certain shop, but have no idea really what they buy, what's in their basket. With the right management, we'll be able to see what the customer's lifestyle is and appropriately give the right offer. So I think a lot of innovation going on there in Poland, and very, very interesting innovation.
So what you described, very strong digitalization across different aspects of financial system, government, and support for innovation. Of course, this will have a tremendous impact on ability of Poland to become the technology hub, to drive further innovation, to become more competitive from the perspective of its financial sector and banking, which is an interesting topic in the broader European or global context. where banking industry is challenged, is suffering. Of course, we have calls for consolidation in different countries, in different markets. We have calls for collaboration. We have fragmented banking systems in many of the European countries. How does this all fit together, and to what extent consolidation versus collaboration kind of cancel its own effects? And that question I would direct to Professor Roubini. What guidance would you give us in terms of role of Polish banking system in the broader European economy, and really first understanding what is really happening in banking in Europe? What's the way forward, given that fragmentation and potential call for consolidation?
Yeah, I'll start to Europe and then maybe zoom in about the Polish banks. I mean, I think there is a consensus right now that while capital ratios like Tier 1 for European banks have gone higher over time, around 14% right now, say for the Eurozone banks. Poland is not part of the Eurozone. That's positive, but return on equity has been quite low throughout Europe and the Eurozone, in many cases below the cost of capital. And if you compare those return on equity to the one, say, of US banks or even European Nordic banks, is much lower. Or the other measure that is important is that, you know, price to book value ratio also below 1, the signal that, you know, you're not even covering the cost of equity and so on. So those are the facts, comparing it with the international or even the Nordic ones. Why that's happening? I would say there are lots of different reasons. You know, the European banks, that ratio between cost to income or cost to asset is very high. You've had the baggage of having low returns on non-performing loans, the legacy of the past, and then you have a massive amount of overcapacity. So too many banks, too small, not enough economy of scale. I think, you know, the solutions that you have to think about the future are several. One, you have to cut cost. Maybe you have to move away from too many branches that are highly costly, not efficient. I think that anything that has to do with digitalization has a huge benefits, and internet-based banking and so on, again, reduces the cost of brick and mortar. That's one thing. The other thing you have to do is, of course, finding new sources of revenue that are based on fee, commission kind of activities, diversifying for those banks who have it. And then the big elephant in the room is the question of, you know, consolidation, because there are way too many banks. You know, in the United States, yeah, they have hundreds of community banks, but, you know, the top 5, whether it's, you know, Bank of America, Citi, Wells Fargo, chains and so on, have a very large fraction of the banking system. While in Europe, you have dozens of banks at the national level and then throughout Europe. And there hasn't been enough consolidation. Now, the consolidation, M&A can occur, in my view, either at the national level, and is occurring gradually. And that's one way of having more economies of scale. Whenever you have too many smaller banks at the national level, that opens questions of, I would say, competition if you're having too much, I have to say, concentration of that. And then the other option that is complementary to the first one is having cross-border kind of M&A activity, having really truly European banks that can compete also with international banks and so on. The amount of cross-border is still limited. There are, you know, lots of issues. It's delicate politically. There are regulatory and supervisory constraints. There are differences in taxation, in insolvency laws. You have to complete the banking union, the capital market union. You want eventually to have a common deposit insurance schemes in Europe and so on. But I think that we have to move in a direction that, you know, either European banks are going to become bigger, both nationally and also throughout Europe, and be able to compete and be efficient with global banks that are either Asians or Americans and so on, or otherwise, you know, the efficiency, profitability, and the provision of financial services of European banks is going to be one of the constraints to the low economic growth, you know, within Europe. Now, I'm not an expert of Polish banks. Many of them actually are doing quite well in terms of profitability. There has been a process of at least domestic consolidation. Some of them may also have kind of European-wide ambitions, and maybe that's also the direction of going. But I would say those are the constraints you have to think about European banking.
Okay, thank you. So we have talked about different examples of collaboration, credit subsidies, payments, impact of technology, innovation. As we are coming to an end of our discussion on the panel, I would like to ask each one of you for the last statement on collaboration, on the value, importance, benefits to Polish economy, to the broader banking system, to your businesses. Just one quick statement, if I may, on the importance of collaboration as we close the panel. May I start?
So I think that we've talked a lot about money, and I think in the end, in a digital world, the future of money is, in a sense, the future of payments is the future of banking. Those things are more inextricably linked than they've ever been. No one of us can answer all the consumer and business needs that there are, and therefore collaboration is going to be a very important element of what we all do. And Europe has got some great examples that we can build off, as has Poland.
Okay, in the space of government subsidies, I believe that the government to financial sector collaboration is a great tool to reduce financial exclusion, and allows providing credit and allows providing the provision of financial services to wider range of clients. And given where the society is being provided basic financial services slowly becomes almost a human right.
Collaboration, we have no choice. I think not only natural partners have to collaborate, like administration and business, but also business, even with its natural competitors, has to collaborate. The cost of assets, the cost of digital services is going to be prohibitive, not to for companies who aren't going to collaborate. So I think it's a no-brainer. You have to collaborate.
I think banking, financial services in more general terms is an industry which can hugely benefit from collaboration, and there's so much value to be created, and benefits can be made for customers, for society, investors. So clearly, I think in this sector particularly, there's a lot of opportunities, and we have seen that many examples today.
Yeah, I think all have been said, but in the world that we live today, I kind of like the word competition, which at the end of the day, nobody can do it alone. So the more we cooperate, the better competitive markets we have and provide better services. And so there's no other way to go. It's really cooperate.
Well, I'll conclude by saying, we're in a world in which, of course, technology is going to disrupt everything in the next few years, but growth depends very much on innovation, knowledge, R&D, and adopting new technologies. And I think that Europe has low potential growth for lots of structural reasons, but one of them might have to do with the fact that the provision of financial service and banking is not up to what it should be. And I think that if we want to think about Europe not falling behind, especially also in innovation and technology relative to, say, China, US, and other parts of the world, having a more competitive, more efficient, more productive financial system, banking system is going to be critical. And therefore, you need to have actually government policy at the European level that then induce the kind of changes at the national level that imply higher productivity and a better provision of financial services.
So thank you for the closing comments. Thank you for sharing great insights and examples. I would like to thank our host, Bank Pekao, for the panel. Thank you. And also, please join me, this is a call to the audience, join me in thanking our panelists, and thank you for your participation.